A QR-coded plaque, a simple self-declaration system and forms in local languages, all part of a new retail tax policy that aims to bring 3.5 million retailers into the tax net in one of the most ambitious efforts yet to formalize Pakistan's cash-heavy retail sector. The government has unveiled a major retail taxation scheme targeting nearly 3.5 million retailers designed to significantly broaden the country's narrow tax base. Under the policy, retailers with annual sales of up to 200 million rupees will be able to register through a simple self-declaration form system available in local languages. No tax agents will be required, and the design is based on past enforcement challenges aimed at reducing compliance friction. The scheme was announced by Federal Minister for Finance and Revenue, Senator Mohammad Aurangzeb, Minister of State for Finance and Railways, Bilal Zakayani, and Member, Federal Board of Revenue, Hamid Atiq Sarwar, at a joint press conference. The scheme is completely voluntary. Eligible retailers can either opt into fixed tax system or continue under the regular tax filing regime. Officials say the reform has been developed after consultations with the trader community and is part of the Prime Minister Shehbaz Sharif's broader ease of doing business vision aimed at simplifying compliance and expanding the tax base. Registration will be available through the FBR's IRIS portal, a dedicated mobile application, or at the nearest tax office. The tax structure is straightforward. Retailers can either opt for around 1% tax on sales or pay a minimum fixed amount of rupees 25,000 rupees annually. Now to the scale. The framework provides significant compliance relief. Participating retailers will not be required to deduct withholding tax on purchases, and the existing 1.5% minimum tax on turnover will not apply. Any withholding tax already deducted can be adjusted against their final tax liability under the scheme. Now to the scale. If the minimum payment is applied across 3.5 million retailers, the scheme could generate approximately 87.5 billion rupees in annual revenue. Crucially, the government has also announced no audit requirement under this framework and no POS system will be enforced. Officials say there will be no routine audits as part of efforts to reduce compliance burden. However, audits may still be initiated in specific cases, including significant unexplained economic activity, high-value asset acquisitions, or suspected misuse or misrepresenting of the scheme. Each registered retailer will receive a QR code plaque serving as a proof of compliance. Officials say if the plate is verified as legal, FBR inspectors will not conduct routine visits, a move aimed at building trust with the business community. Street vendors such as Redi and Coca operators are excluded from the scheme. The scheme also excludes owners of multiple shops, businesses with annual sales above 20 crore rupees, Tier 1 retailers, jewelers, retailers operating credit card machines, and professionals such as doctors, engineers, and lawyers. Participants will also file a simplified one-page tax return available in Urdu and regional languages covering sales, purchases, expenses, profits, and assets. Existing tax filers for tax year 2025 may also opt into the scheme provided they do not artificially split businesses or understate income to qualify. Those who neither join the regular scheme nor file regular tax returns may face penalties ranging from 10,000 to 50,000 rupees under a phased enforcement mechanism. Now, why this matters? For years, Pakistan's tax system has remained heavily dependent on the salaried class, while large parts of the retail sector operated outside the formal tax net. This scheme is being positioned as a structural shift aimed at expanding the tax base, improving documentation, and easing the disproportionate burden on salaried taxpayers.